The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It's Wednesday. We got about 24 minutes to go until the start of trading, and after the bell today, the main event of the week, NVIDIA earnings coming out after the bell today. And right now, we are flat on NVIDIA, as we're pretty much flat with the market. We got the market slightly in the red. You got NVIDIA shares almost flat to the penny right now, 128.30. You have NVIDIA's market cap. How about almost $3.2 trillion? We'll spend some time talking about NVIDIA. We're even going to set up some example trades for NVIDIA at 9:30. So check that out. Stay tuned. We'll set up some example trades in the option market. Just go over some of the implied volatility, the expected move. We'll check that out. I thought that would be a cool day to do that with NVIDIA. Driving this market higher. We'll see if they can sustain the acceleration and the momentum on their earnings after the bell today. S&P is negative by 3, trading right now at 56.42. NASDAQ 100, negative by just 22 points, about 0.1% in the red. 19,628. You get the Dow right now, negative by 6 points, and the Russell, negative by 9. Bitcoin, off about $2,000. Check that out. Right at about 60,000 right now. Crude backing off from the highs earlier this week of 77.60. You trade lower yesterday. This morning, we're off by another 65 pennies. We're trading at 74.90. We'll talk to our man Teddy Kegstad, author of the Tiger Forex Report. He's up at 40 past the hour today. We talk to him every Wednesday at 40 past the hour. We'll talk some currencies, and we'll talk some commodities. And it's always a great day to have Teddy on. And look at the action we got in the dollar today, right? Check it out, man. We got dollar strength. Pretty remarkable, the move we have from the close of action yesterday. 100.51 yesterday, and we're up more than 56 pennies. We're back above 101 right now. Especially interesting when you look at not a huge reaction in the note and bond market. You get the 10-year right now, basically flat. We're trading with a yield of 3.83%. You jump over to the 30-year, basically flat as well, 124.13. And yeah, you got dollar strength though, and that is going to put some weakness into gold. And you get the gold contract down about $20. A little bit of a bid. We were down 20. We're down 15 right now at 25.38. Still quite a price tag for gold. We'll see where the day goes, but it is interesting. We got a lot of dollar strength when we got yields pretty stagnant right now. But boy, we got an interesting day coming up with NVIDIA earnings after the bell. We jump around to some of the FANG stocks as we kick it off. Apple shares right now basically flat at 228. You check out Microsoft shares trading flat as well. And as I mentioned, NVIDIA 128.22, the all-time high for NVIDIA, sitting out there at 140.76. Quite a resurgence from the lows of August 5th when we were down at $90. And let's jump into it with NVIDIA. Earnings after the bell. And how about it, man? Since that August 5th low, you want to talk about a number? And I've been talking about it. I mean, you're talking about 10% in the S&P. The NASDAQ 100, my goodness, $4 trillion recovery is what this market has done since August 5th. When you ask people why they buy the dip, that's why, folks. You buy the dip and you buy it right. $4 trillion is what this market has done since August 5th. Now, that was the carry trade unwinding, okay? But still pretty interesting. You talk about numbers, man. We had a 10% drop, 10% rise, pretty remarkable. And you got NVIDIA up 28% in just 3 weeks. 28% for a $3 trillion company. I'm not sure we've ever had that amount of raw volatility in an equity that's not really equity news driven, right? No real news in the equity, just kind of market volatility. And meanwhile, you got it was the biggest company out there in the world at one point when it hit that high. Remember, you're still sitting at 3.2 trillion. Nonetheless, the numbers that they'll be looking for, okay? So they're going to report second quarter earnings. Now, check this out too. I'm going to go back to the beginning. Because check this out. On the front page of Bloomberg, I like this one. Check out how this stock has done. There's been very little disappointment since going back to when ChatGPT started, which is about 2 years ago, which is remarkable. The last 2 quarters, just gangbuster beats, which is remarkable when you think about the expectations that were tied in. right? We back it up to 2 quarters ago. You came into at about 70. Within the span of no time, you were pushing 100, let alone the next day. And then their last earnings, you came in at about 93, and that was the catalyst to the run up to 140. Absolutely remarkable. You see, these are the market caps added post earnings for the last couple times. No, more than that, right? Quarter by quarter. Now, you jump into what they'll be looking for. They're going to be reporting second quarter. They'll obviously be talking about a forecast, I'll get there, for the current quarter that they're in, and then they'll give their full year as well. Revenue for the current quarter that they're reporting, 28.9. Data center revenue, almost all of it, 25.1, right? How about the gross margins on this business, man? 75.5%. R&D expenses, $3.1 billion. Adjusted operating income, $19 billion. 18.9. I'm going to round up, okay? But nonetheless, you see it. It is quite a big number across the board. Third quarter, pretty similar numbers except higher across the board. And for the full year, how about revenue of $121 billion? Pretty remarkable when you look at it in that context, what they'll be going by. Yeah, but the expected move, about 10% on their numbers. We'll talk about that at 9:30 as we break down some of the options. I'll take a look at some example trades just to show you the kind of implied volatility that we're talking about there. And when you look over to the Analyze tab, there it is. $12 move, almost 10%. And if you want exposure through Friday, you're talking about $13.24 of implied volatility in either direction. And yeah, that's more than a 10% move. And this company is valued at $3.15 trillion right now. So that means you're talking about $315 billion in either direction. Pretty remarkable. Yeah, and this is the chart that they had on the front page in terms of market value added versus market value lost following earnings. Yeah, they've had some disappointments. And those disappointments are 50 billion, right? Big numbers, but nothing compared to some of the runs they've had on the high side when they continue to beat. And they are beating just remarkable expectations at this point. Yeah, so investors going to be watching for signs that another NVIDIA chip, the H200, is seeing demand that could offset pushing out revenue from Blackwell. See if that comes to fruition. I was seeing this morning, you have the CEO, Jensen Huang. He'll be out there on Bloomberg at 6:30 p.m. Eastern time tonight, so he's going to make the rounds. It's always interesting sometimes trying to read into a CEO and what they plan to do after an earnings announcement, right? Part of me wants to say, is he booking appointments post-earnings because he knows they're going to be gangbusters and he wants to tout them? Or is he booking them because he knows he's going to have some explaining to do? That's where we're not quite sure. But he's going to be on Bloomberg at 6:30. That might not be the only interview that he'll be doing, but he is planning the 6:30 p.m. Eastern time tonight live on Bloomberg for an interview. It's all going to be NVIDIA after the bell. And yes, with a market cap weighting of 6+% in the S&P, you better believe that it has the ability to move this market. Excuse me, folks. But nonetheless, we'll spend a little bit more time at 9:30, as I mentioned. We'll set up some example trades. We'll go over that. But NVIDIA, about a 10% move implied for their earnings after the bell. And when you think about it, right, not really a huge move. When you look at the type of volatility this equity has on any day, even without earnings. We got a lot to talk about, folks. Stay tuned. We'll talk some other equities when we get back. Right back. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got NVIDIA dipping a little bit. We're at 127.92. Going to be interesting to see how that stock behaves coming into the trading day. People getting positioned for the earnings after the bell. We got markets slightly in the red. As I mentioned, yields pretty calm right now. We got the 10-year up 2 ticks right now. A yield on the 10-year of 3.82%. But yeah, we got some dollar strength, man. Dollar back above 101 at 101.07. Up more than 50 pennies right now. And you take a look, and we got mortgage rates dropping again. Shouldn't be too surprising considering what yields have done, right? We're back at 3.8. We were at a 3.7 handle for the yield earlier in the week. We have the 30-year fixed rate, 6.44%, the lowest it's been in about a year and a half. You take a look at this on the chart, and yeah, if you're in the market for a home, getting a little bit more attractive, step by step, right? We're approaching 8. We were at 7 not that long ago. We're at 6.44 right now. As that market continues with mortgage rates to drop. And remember, there may be some room even further from there, because historically, the mortgage rate on a 30-year has been about 2 percentage points above the 10-year. The 10-year is at 3.8 right now. We could easily have mortgage rates come down to 5.8 to 6%, right where we are right now. And that would just be coming to the historical norm of a 30-year fixed rate mortgage coming in about 2 percentage points above where the 10-year is. Now, that's the historical norm, right? Past performance not always indicative of future results, as they say in every disclaimer in finance. So you never know if it's going to play out exactly the same. We might be in a little bit of a different range here in terms of higher for longer, how that shapes where the 30-year is versus where the 10-year is, how that shapes where a 30-year fixed rate is versus where a 10-year is. Nonetheless, we're back to 6.44. You start getting a 5 handle for mortgages, that might do it, man. As in just the mental gymnastics that somebody could do in terms of saying, man, at least I'm at a 5. And remember, you always have the ability to refinance. And I'm not telling you to go out there and do it, but it is intriguing that a fixed rate mortgage is pretty awesome from a consumer side because you have the option to cancel it. Bank doesn't have the option, right? So you lock in whatever rate they give you, and then you have the option to cancel it and get a new rate, paying, of course, the closing fees anytime you'd like. Bank doesn't have that option. So you're the one with the option. They have no option. So if you're getting in there with a 5 and you can handle the payment, then you say to yourself, you know what, this isn't that bad. I can handle the payment I'm getting into. I got a 5+% mortgage rate. And if rates continue to drop and they get down to a 4, 4.5, maybe I refinance. If they go back up to a 6.5, 7, then I'm locked in. So we'll see. We're still at 6.44, not quite at the level, I think, where you're making a change for the mentality of consumers out there. But nonetheless, it is a change that matters when you start looking at payments. Because if you're in the market for a home and you're running payments just a few months ago with a 7% mortgage rate, that just dramatically differs in terms of where you are when you start running at 6.44. Excuse me. All right. We jump to EVs. BYD. They're crushing it, man. First half profit rose on strong EV sales despite slowing China demand. Check out the numbers. Where are they? Okay, I thought I was looking at a chart. Maybe I was earlier. Nonetheless, net profit climbing 24%. They do things in won here in this article. 13.63 billion won. They're making about $1.91 billion in the first half of 2024. Revenue rising 16% to over 300 billion won. Let's see. Both measures missed consensus estimates. Analysts were looking for about 15.3 billion won in terms of the profit. And they came in at 13.63, and they were looking at 331 billion in revenue. But some of these numbers, percentage-wise, just huge, especially when I compare it to Tesla, which seems to be struggling across the board. They delivered 426,000 fully electric EVs in the second quarter, up 21% from a year earlier. Rival Tesla, 443,000. So they're just above it, but I don't think that's going to hold for too much longer. They briefly overtook Tesla in battery EV sales in the fourth quarter last year, but Tesla's got the deal on them for a yearly basis. They're going to accelerate localized manufacturing after the European Union finalized tariffs. So yeah, they're going to start making cars everywhere, as is the case, right? We got BMW dealerships in the U.S., et cetera, all that stuff. That's going to happen across the board here. Even with these Chinese companies, to avoid some of those tariffs, they're going to bring it in-house, whether it's in Europe, whether it's in the U.S. It's going to happen, folks. We'll see how some of those tariffs take shape. R&D expenses, 19.62 billion won. Yeah, everything's in won in this one, so a little bit more difficult. How about Lego? You talk about it. Listen, I got, Tommy, he loves Legos already, man. They make the Legos for younger kids, then they start making them for older kids. His brother Landon, who's 7, he loves Legos as well. Some of the video games they play are Lego Marvel games. So you see, like, they have video games that are Lego games, already pushing kids into that whole ecosystem. And yeah, how about sales? Up 13% on the year, $4.65 billion in sales. And it is interesting, when I go into Target, pretty remarkable. Lego has almost a whole aisle in the toy section themselves. They have half of an aisle, right? A whole aisle on one side is Lego in Target. Remarkable when you put it in that context. The type of store face that they hold in some of those big retailers. But nonetheless, yeah, sales up 13%. They continue to crush it. Even as you got some of the toy makers continuing to struggle. What is Lego? Is it just as simple as Lego? What's their symbol? Are they even public? Lego Group? Maybe they're not. We'll have to look them up. I better pay attention because Tommy loves those things. Jump over to Hasbro. Yeah, it's been on quite a tear this year, but recently underperforming the market. You're at $67 for Hasbro. But yeah, Lego continuing to crush it in a big way. All right, what else we got pulled up here? Yeah, we talked markets. Yeah, this is just talking about NVIDIA as well. Another article from Bloomberg out there posted last night. Stock traders on edge. Well, it's just going to be a make or break day, as is usually the case. AI has been driving this market higher. You get NVIDIA, the poster boy for AI. You check out the returns. How about outperforming a gangbuster market, too. You got NVIDIA up about 160% this year. Meanwhile, you get the NASDAQ 100, remarkable performance, up, 20%, something like that on this chart, but NVIDIA blowing it away in a big way. Normalized as of December 29th, and yeah, pretty dramatic return so far, and we get to find out where we're going from here after the bell. Yeah, we got Raphael Bostic. I'm not sure when Waller's speaking. I saw that Bostic is speaking at about 6 o'clock tonight. So you got a little bit of Fed speak coming out of things as well. We got GDP and initial jobless claims tomorrow. That's U.S. GDP. I guess you got Bostic speaking again tomorrow. So you got a little bit of Fed speak. We got GDP, initial jobless claims tomorrow as well. And then, we got PCE on Friday. But the big number, folks, is going to be next Friday with the jobs number, September 6th. All right, folks, stay tuned. We're coming back for the open. We're going to take a look at some NVIDIA. We'll set up some example trades for their earnings after the bell. Don't go away, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got the S&Ps right now, negative by 2. NASDAQ 100 just slightly in the red by 13. The Dow off by 21, and the Russell off by about 0.4%. Russell trading at 2202, off by about 7 points right now. We check in on the dollar index. Dollar with some strength today. And yeah, when you put it on a weekly, you don't quite see it. We put it back to a daily, and you barely see it as well. But that's quite a move, man. 50 pennies. But look at the move we've had to the downside, right? don't get distracted by that move. And we'll talk some currencies with our man Teddy coming up after the break. And we jump over to NVIDIA. NVIDIA shares down about 60 pennies as we kick it off. Now remember, we jumped over here, and you take a look at the implied volatility. Okay, now what's cool is options. We're going to go over little options. We'll just set up some example trades, folks. And that'll be fun. We'll see types of trades. And, you know, you have to have a market bias in options. You have to. Otherwise, everything is kind of priced for the expected move, right? If you didn't have to have some type of bias or expectation, how are you going to capitalize on what is priced into the market? Because that is where the market's never wrong in a certain essence, right? And we find out whether it's wrong after the bell, but it's not wrong right now because all things considered for the information we know right now, the market is priced correctly because that's the market. That's kind of how it works. But you take a look. Here are the option chains. You want exposure through this Friday, options expiring August 30th. You're looking at about $14 move in either direction, okay? Now, a majority of that implied move has to do with tonight after the bell, okay? Now, we're going to trade these options, and we're going to take a look at just simple trades you can set up here, okay? Now, the first one, and I'm on the Thinkorswim platform here. I'm in the Analyze tab, and I'm setting up simulated trades here, okay? This is not a live trade, and this is a live account. You can do these in demo accounts as well, but even in a live account, you can just kind of play with simulated trades. You can see the risk profile, which I love displayed on a chart basis. So we'll start on the simplest form, right? You say, I'm bullish NVIDIA, man. I'm bullish more than the market. I think the market is underpricing the potential move they have going into earnings, and I'm going to buy a call. It's about as simple as it gets in options, right? You got calls on the left here. You got puts on the right. We take a look at about an at-the-money call, trading 3 pennies away from 128. You're looking at about $7, okay? So if you want to buy it, you can buy on the ass for $7 on the dot. You hit buy. Now what's cool is you go to the risk profile, and this shows you real easily, okay? And keep your eye on the blue line here for clarity. And the blue line is as of August 31st, which is basically when they expire, okay? Show me the potential for max loss, which is right here. If this expires, okay, anywhere below 128, it's worthless because your option is the right to buy NVIDIA at 128, right? So obviously that is a worthless option if NVIDIA isn't even trading at 128. Now, anywhere above 128, you start getting back a little bit of value because you have the right to buy it at 128. So let's say it's trading at 130 as of the close of Friday. Well, you exercise that option to buy it at 128. You could sell it into the market at 130. You get back $2 of your investment, but you paid $7. I'm just going to push it down to one contract for simple math, okay? And one contract, remember, is 100 shares here, folks. So that is why on this chart, you're looking at a max loss of about, and let's just put it to $7 for simple math. Okay, it is moving around as NVIDIA is traded a little bit, but you're looking at a max loss of $700, and you're looking at a max profit of infinity because, in theory, NVIDIA could go up to infinity by the end of the week. Okay, now you say to yourself, you know what, that's great, but I got to go to all the way to 135 to break even because the stock's trading at 128 right now. I'm paying $7 for the right to buy it at 128. So I need to get past 135 to make any profit. You say, you know what, that's a little bit much in terms of I think it's going to go up, but you know what? There's a lot of volatility into this equity. We go back to simulated trades. You say, you know what? I think it's going to go up, but I'm only looking for it to go up a maximum of $10 today, right? So you're at 128. You buy the option at 128, and what you can do is you can cap yourself out by then selling another call, okay? And this is called buying a debit call spread, okay? And it's a spread because it's giving you the spread to own the equity from 128 to 138. So we've bought a call at 128. We are then going to go into the market and sell the 138, okay? Did I do that right? Yeah, I did, but I got 10 in here. There we go. And now what it's done, no, I did something wrong there. Hold on. There we go. Now what it's done is instead of paying $7, okay, and this market's jumping around a little. Where are we at? Yeah, we're almost at 128. Now what it's done is it's capped our profit at $138, but also it's pushed our initial investment down to only $3.80 as opposed to $7. And I love the way this, again, keep your eye on the blue chart here, the blue line. Again, our max loss is anywhere below 128, we lose everything, okay? But what's going on now is we've only put up $3.80. So where's our break even? Instead of being at 135, our break even is now $3.80 above 128 because we start to get value at 128. We get a little bit of intrinsic value in that first call. And then we have to make up our investment, which is almost $4. Let's just call it 4 for simple math. So you got to get to about 132 to break even. Well, the other flip side, though, is that our profits are now capped at 138. So we have a max loss in this trade of our initial investment of $3.85. That max loss occurs anywhere below 128. And you got a max profit out there, which is basically the $10 range minus whatever you paid up front. So you're looking at about $615, right? So it's the $10 range minus whatever you pay up front. So you got a max loss of 4. You got a max gain of 6. Not a bad trade sometimes. If you think that this thing has some upside equity, right? You think that it has equity, but maybe it doesn't have quite the implied volatility you're looking for. Yeah. Now, you want to do it the other way, okay? You want to be the one that's saying, you know what? I think there's way too much implied volatility in this market. What I'm going to do is I'm going to be the buy. I think it's going to finish flat. I think NVIDIA is just doing absolutely fabulous, but I think it's probably priced well at about $128 right now. It's a $3.2 trillion company almost. I think they're going to come out with earnings, and I think they're just going to trade around where they are right now, okay? Let's say that's your market bias, all right? Well, how do you capitalize on options? There's tremendous ways to capitalize on that on options. In equities, you really can't capitalize if you think it's going to go flat. In options, coming into earnings for an equity like NVIDIA that has a 10% move priced into that equity, tremendous value sometimes if you're correct. Yeah, the golden if, right? But let's say you're the one that sells somebody else the right to buy NVIDIA at 128. And what's key here is, okay, is that you never want to sell naked calls, folks. You just don't want to do it. There's no reason. Because in theory, if you were selling a naked call, your loss is infinity. Just like when we were the one buying the call, our profit potential was infinity. You sell that call, your loss is infinity. And NVIDIA, you don't want that one. So you're the one now selling a 128 call. You buy a 138 call to max to cap out your losses. And in this case, you take in, this is a credit call spread, all right? You take in almost $400. Your max profit is what you take in, $385. Your max loss is the $618 if it trades higher. But guess what? If it stays right where it is, it's your max profit. Pretty cool. NVIDIA after the bell, but we're coming back. Excuse me. We're going to talk some currency. Take a look at that dollar with strength today with our man Teddy Kegstad. Don't go away, folks.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the market slightly in the red. S&P is just negative by 4 points right now. That's less than 0.1% in the red. You get the NASDAQ 100 negative by 39, about 0.2% in the red. And man, we got some dollar action today. Always a great day to talk to our man Teddy Kegstad. And folks, you can head on over to the front page of TFNN. Right under the newsletter tab, the Tiger Forex Report. Teddy puts that out. New issues every Monday morning. Updates throughout the week when warranted. Only $97. Comes with a 30-day money-back guarantee. And don't forget, right under the Services tab, he's got a couple of great webinars out here. Capitalizing on time with calendar stock option spreads. We were just talking about options. If you're into options. And then Japanese candlestick pattern stock and option strategies. With Teddy, both of those just $97. Check those out. And let's get into it. Teddy Kegstad, good morning.
Good morning, Tommy.
So we had Jackson Hole last Friday. The market reacting a bit to that. Seems like Chairman Powell might be ready for some cuts coming down the line later in September. Where we go from there is anybody's guess. But why don't, if we can kick it off maybe with the dollar? We got a little bit of dollar strength. You know, nothing dramatic from the moves that we've had recently. But what do you think about kind of the dollar index? I mean, a little bit of a bounce today. You know, no huge move on yields, but a little bit of a bounce counter to what we've been doing. Where do you want to kick things off, Teddy?
Well, you got to remember, yesterday was the lowest low we've seen in the dollar index in over 4 months. So an update today right now is not really much of a big deal. Granted, it is a very nice up move as far as on a daily basis this morning. And it's really, I think, just been a profit-taking move. It started yesterday with a little bit of a leaking trade after it set the bottom. And then basically has been grinding higher as we headed into today, you know. So I think it should be viewed as a profit-taking move. If you look at the 10-year and the 30-year, they're relatively flat. They're wedging. You know, I think they're going to be pretty much staying where they're at in a range trade until after we get through with the next Fed meeting. I mean, we'll probably see a couple spikes depending on the numbers that come out. Especially unemployment next week. If unemployment comes out higher, I would assume that you're going to see the 10-year and the 30-year making new daily highs and going into that number. As far as how far they will go with those highs, I wouldn't expect very much. I just think you'll be, basically just piercing the upper boundary of the range and then coming back into it until, like once again I said, until we have a Fed meeting and actually have a rate decision. I think the number is crucial, and it'll be interesting, especially if unemployment surprises to the downside and becomes even remotely, well, I wouldn't say a little bit lower, but if it's significantly lower off the forecast, I would say that would be something that could put a hold on the Fed's actually cutting rates. that would be something to look out for. But right now, as far as the dollar index, I think you're just looking at a profit-taking move. As far as how far can you go, I mean, if you look at the euro right now, but we'll get to the yen. That's something that we probably should get a little bit of a topic on today. But if you're looking at the euro right now, you have basically a double top that came in from Friday into Monday. So Tuesday's trade was not much of a big deal, and now today we have obviously a nice range for the day, and we're hovering on the lows. But you got to remember the slope of the euro US dollar trading, just like the slope of the dollar index, has been very steep over the last 3 to 4 weeks. I'm saying right now you have to really view it as a profit-taking move. Right now, there's no real fundamental reason to think that we're having any type of trend reversal, and I mean, I always say never try and pick a top or a bottom, especially like we just bottomed out in the dollar index yesterday. Today, one day does not a trend make.
Sure. Yeah, it's pretty interesting. You look at on a 5-minute chart, I pull it up and I'm like, man, that's quite a move on the dollar from where we were at the close yesterday to where we kick things off today. You put it on a daily and you just go back to where we were the beginning of July, and you can barely see a pop in that market. It's been red, lower lows and lower highs across the board over that period of time. Pretty dramatic. Let's jump to the yen. Let's do it. I was taking a look at the yen. Everything moving a little bit today, like you mentioned, off of kind of where we've been. But what do you think about the yen action?
Okay, the yen right now, I like it. It's hovering just below our monthly directional pivot level, right around 145.09. I think that if we can get a close above that, that would be significant in that the short-term trend should be not getting bullish, but I think you can see a very positive to neutral bias that will be coming into the U.S. dollar yen. Until we cut rates, there's a good chance that we could see a spike up towards that 150 level, especially if the numbers, like for instance, if unemployment comes out better than expected, and if we have some other economic numbers over the next couple of weeks to start to go against the trend that the Fed is looking for, I think you could see a spike in the U.S. dollar yen. Getting above 150, I think, is going to be very difficult with a rate cut looming. Now, should the Fed not cut rates next month, then you may see that the yen actually get a shot up towards that 152 area, because if they don't cut rates in September, what's the market going to do? It's going to definitely probably lean towards the other direction until there's enough fundamental bias leaning towards a rate cut.
Yeah, if they don't cut rates in September, watch out in this market, man. That would be quite a repricing compared to where this market is across the board right now. But it'd be interesting to see, and it's happened before, as we know. Don't have to go too far back for the market to get ahead of where the Fed is. And like you said, it's we got some pretty important data coming down the line. We get the jobs data coming out. They'll be watching that. There's always surprises that are possible. But yeah, that would be quite a shock in terms of where the market is positioned, and we'll see where that goes. You got the 10-year. What do you think about the 10-year sitting at 3.8 right now? I mean, I know it's, we've had quite a pullback. The market is pricing in some of those cuts that they're expecting. But what do you think? I mean, I asked that with my own mentality, saying that's a pretty low 10-year with where the market is, with where some of the growth is in this, AI growth-based, technology-based economy. It's a pretty low cost of capital, all things considered, 3.8%. When you have, market at all-time highs. You got NVIDIA earnings after the bell today, of course. What do you think about just kind of that 10-year? What's your take on a 3.8 right now with everything going on?
I like it at the level where it's at. I don't think that now when we do start to see rate cuts, whether how severe they are or not, I don't think you're going to see as big of a move in the 30-year. I think you're going to see more of an exacerbated move in the, I don't think you'll see as much of a move in the 10-year as you will in the 30-year. Your shorter end of the curve are leading the charge on this trend, and the fundamentals that are going in front of a potential rate cut. So I like the levels where it's at, but I'd be very careful as far as being along, looking for how high you can see this market go, unless we have some really drastic, economic numbers or something that would really look at us saying, hey, the Fed could be doing like 1.5 over the next 6 months or something like that, which I think that would be, it would take something to be a really big shock to the system, because otherwise it would really say the Fed was behind the ball, which, we don't need to be Monday morning quarterbacking that. Now we're in the present. So let's see what happens then over the next couple of weeks. And once again, I would say watch the economic indicators, because if they reverse gears off of the month in and month out trend, we're going to probably see, the opposite of the trend that they're trying to put in place right now.
Can you hang with us to talk a little bit of crude after the break?
Sure. Okay.
All right, we'll come back with Teddy, folks. We'll talk a little bit of crude. We'll wrap up the program. You got crude right now down 80 pennies, trading at 74.71. We'll touch on gold as well. Don't go away. We'll be right back with Teddy.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps down by 5 right now. We take a look at NVIDIA. NVIDIA down about 1.5%, down $2. We await their earnings after the bell. We're talking to our man Teddy Kegstad. Don't forget, folks, to check out the Tiger Forex Report and a couple great webinars under the Services tab. Teddy's got it as well. And yeah, so what do you think about the price of crude, Teddy? Still with a 74 handle, a little bit of volatility this week, up to a high of 77.60, but all things considered, pretty cheap oil right now at 74.65.
Well, let's just talk about the numbers. The low that was set last week was the lowest intraday low we've seen since April. But of the 2 other previous lows, it wasn't very much lower. We had a nice bounce, and we rallied into our critical resistance band from the Tiger Forex Report on Monday. the market stalled, and we've had a nice correction over the past 2 days. Now, interestingly enough, from the high of Monday to the low of today, you have pretty much a exact Fibonacci retracement of 0.618. So I would use today's low and the high of Monday as your critical pivots for the rest of the week. Should we take out the high, then I think we're going to be pressing up against that 78.15, which is the upper band of our critical resistance band. If we can get a move above there, then I think we have a good shot at shooting up towards 80. 80 is a critical level. If we close above that, then we're going to be pushing the upper end of the range over the next couple of weeks, I would think. If we take out the low from today, not necessarily today, but if we don't take out the high from Monday, but let's say tomorrow or Friday we slip below the low of today, that would be a pretty good indication that the market wants to at least kind of tread along the lows from last week. Are we going to take it out? Probably not. But I think that you will see the market kind of running along those lines somewhere in that 71 to 74 area for a little bit, perhaps. I would like that. I think everyone else would like that. But be careful. But be careful of those levels. I would say, if you're short against Monday's high, you should have your stops pretty tight above there. I don't think that would be being a weak short by any means. Sure. And as far as trying to trade the other way too, I'd be very cautious as far as trying to see a big sell-off. You're kind of right now probably in the middle of a range right now, so be careful with that.
Great take, man. I appreciate it as always. I put that Fibonacci up there as you were talking about it, right at that 618. Gotta love it, man. Teddy, I appreciate it as always, man. Have a great week. We'll talk to you next Wednesday, okay? Have a great Labor Day, man.
You too. Be safe.
Thanks so much. Folks, stay tuned. Basil's up next. We got an